Right, so on the surface, the metrics do look a bit ugly. New buyer inquiries, net balance minus 32, agreed sales languishing at minus 23 on the balance. The national house price balance, which is the one that everybody looks at, minus 16, and London hemorrhaging value at minus 44, which is a direct mathematical consequence of the high valuation council tax surcharge, or the mansion tax as we'll end up calling it for all time, and then the lingering hangover from the autumn budget. The capital is being punished for its asset values, whereas Scotland and Northern Ireland continually and quietly march upwards, oblivious to the carnage in the southeast. But before you panic, look closer, because this is where the amateur sees a crash and the professional sees a mispricing of risk. And that ultimately is how you make money in property. So, the most fascinating data point isn't the sales drop, it's the rental market. Tenant demand net decline of minus 22, weakest reading since April 2020. Disaster, a slump. Well, not really, but let's look at the supply side. Landlord instructions collapsing by minus 39%. So we're witnessing a market in deep freeze, not in free fall. Landlords are exiting or pausing, spooked by fiscal tinkering, and tenants are hitting an affordability ceiling that simply cannot stretch further. When supply contracts faster than demand, yields don't crash. In fact, they harden, they move upwards. So this is something we're actively seeing play out in the market. Asking rents down in many locations, although the figures aren't necessarily percolating through yet. But I'm in conversation with broader professionals all the time, not the majority of the market, which is still, ultimately with the clock ticking back in the background, 1, 2 and 3 property landlords. So I get my info from the portfolio, people like myself. The herd is looking at this minus 16 price balance and seeing 2008, but really they need to look forward at the 12-month expectations, because those same surveyors reporting on the grim November are forecasting a plus 24 net balance for house prices over the coming year. So just as a little reminder how those balance figures work, if we've got plus 24, it means we've got about 65 saying forward and 35 saying backwards. That would be plus 30 actually, so my maths is slightly off there. I do apologise. But still overall pretty positive, 2 to 1 roughly ratio in terms of positivity.